Thank you for joining us on America's Roundtable, a weekly program from Washington, D.C., with leaders from business, media, think tanks, and the political arena. I'm your co-host, Joan Sami, joined by Natasha Savdorch, co-founder of the International Leaders Summit and former contributor to the Economist Intelligence Unit, and guest co-host, Becky Norton Dunlop, former director of President Ronald Reagan's White House Cabinet and the vice president at the Heritage Foundation. Today, we're delighted to have join us Alvin Rabushka. Dr. Alvin Rabushka is a senior fellow at the Hoover Institution. He is the author and co-author of numerous books in the areas of race and ethnicity, aging, taxation, state and local government finances, and economic development. His books include Politics in Plural Societies, A Theory of Racial Harmony, The Urban Elderly Poor, Old Folks at Home, The Tax Revolt, The Flat Tax, From Adam Smith to the Wealth of America, and a number of other publications and books. In 1980, Alvin Rabushka served on President Ronald Reagan's Tax Policy Task Force.
Hello, Alvin. Thank you for joining us today.
How are you?
Great. Your books and articles on the flat tax with Robert Hall provided the intellectual foundation for numerous flat tax bills that were introduced in Congress during the 1980s and 90s, and the proposals of several presidential candidates in 1996 and 2000. You were recognized in Money Magazine's 20th anniversary issue, Money Hall of Fame, for the importance of your flat tax proposal in bringing about passage of the Tax Reform Act of 1986. You firstly developed and proposed the flat tax concept for America in 1981. Could you share with us the features of the flat tax?
Yes. The flat tax focuses on having a very simple system that ordinary people can understand and complete without the help of tax experts, tax advisors, accountants, and other specialized personnel. The idea is to treat all income derived out of the economy as the basis of the tax system, the gross domestic product, with deductions for all business outlays, deductions for wages and salaries, which will be paid by individuals. I'll give that in a second. And then the income of business enterprises will be taxed at a flat rate. And then the wages and salaries deducted from the business but taxed at the individual level will be given a personal allowance, and their net income will be taxed at a flat rate. The rate will be the same for both, and there will be no double taxation, which means when a business earns an income and pays taxes, there will be no subsequent tax on dividends or capital gains, so that individuals receiving those will have already paid the tax. Finally, interest will neither be tax deductible nor tax reportable, which eliminates all the 1099 INPP paperwork that everybody has to assemble and report. So the notion is to have one rate, a low rate, a flat rate, a personal exemption, an investment incentive in the form of 100% first-year write-off of all investment spending, and the rest will simply be taxed at the same rate. This simplifies the system into two postcard-sized tax forms, one for individuals and one for businesses. And by having a low flat rate, it will help reduce tax evasion, tax avoidance, the underground economy, and reduce the cost of compliance, which runs in the hundreds of billions of dollars.
It's unequivocal principle of what you mentioned in your book, that you tax income only once and as closest as possible to the source. It's a principle that holds the water at every occasion, and I think the way you described it is an ideal proposal for America. Since 1981, the flat tax concept has been adopted by more than 20 countries around the world, and America is looking for a comprehensive tax reform that will foster job creation, competitiveness, and economic growth. A flat tax has received a bipartisan support in America, yet we haven't seen its implementation. What is the reason for that?
We went a long way to the flat tax in 1986 with Ronald Reagan's Tax Reform Act of 1986, which established two rates of 28% and 15%. The idea here was to move as close as possible to one rate, but the politicians were not sure they could move all that way. They felt they would take two rates and then maybe later move to one. Unfortunately, in America, there are many, many people who want to use the tax code for redistributing income, and it is indeed unfortunate that Ronald Reagan's vice president, George Herbert Walker Bush, agreed to raise the top rate by adding a third rate to 31%. And by doing so, he began to undercut the progress made in the direction of a low flat rate. Then this was followed by Bill Clinton, who added rates of 36 and 39.6%. And what happened is the basic idea of taxing everybody equally now gave way to taxing people who earn more at ever increasing higher rates, putting thousands of pages that were removed from the tax code back in the tax code, taking all the special interest provisions moved out and put them back in, and we're back where we started from with even worse. The opposition takes, I think, several forms. One is ideology, in which people on the left side want to tax the rich ever more to redistribute it to those with lower incomes. This is both ideology and buying votes, especially since half of American tax returns pay no federal income tax to speak of, only 3% from the bottom 50% tax filers. And secondly, interest groups, once they've been in business for 10, 20, 30, 40 years, are very hard to do away with. So we have the home mortgage interest deduction, the charitable deduction, the research and development credit, the energy credit, the charitable contribution, the state and local government deduction. There's hundreds of these things. There's tens of thousands of lobbyists in Washington, D.C. The problem then is how we are able to remove the influence of left-wing ideology and the influence of all these interest groups so that everybody, the country as a whole, would end up paying a low, simple, flat tax that would be good for taxpayers, good for economic growth, and over the long run, actually good for the Treasury.
Experience has proven that communism does not work, and I would like to remind our listeners that highly progressive income taxation that we have today in America was firstly proposed by Karl Marx, who lived in the 19th century. He's a father of Marxism, and he was very critical of capitalism, which he called dictatorship of the bourgeois, and was a great proponent of socialism that will lead to communism. It's actually the idea behind a highly progressive taxation is to take from the rich and give to the poor, with the knowledge that communism doesn't work and that the objective of the tax policy is to achieve as highest as possible rate of growth for as long as possible period of time. Shouldn't the legislators be aware of that?
Yes, they should. Part of the problem in the Western world, and by that I mean Canada, the United States, Japan, and Western Europe, and other countries in Africa, Asia, and Latin America that have copied their tax systems, is they argue that the reason communism failed is because they didn't do it properly. They had too much bureaucratic Stalinism. They didn't separate corruption from proper understanding. In other words, they were very bad communists. If they were good communists, it would have worked out better. The problem, of course, there have been no good communist regimes in history that anyone can point to. But still, in the West, there's this idealized notion that we won't be communists. We will have some semblance of a private enterprise system, but we will strive for social justice, for the social market economy, for welfare for the poor and the lower middle class. These terms are never properly or fully defined, and the result is whenever a politician is seeking votes, they can always appeal to the bulk of voters by saying take a little bit more from the poor, regulate a little bit more of the rich, give it a little bit more to those on the bottom half of the spectrum. We'll have less income equality, a healthier society, a happier society, a more stable society. And this always sounds good. Remember, anyone who promises to rob Peter to pay Paul can usually count on Paul's votes.
The communism failed mostly because there was no rule of law, which means that some people were above the law and as also always said it, we are all equal, except that someone are more equal than others. And that's what happened actually in communist systems. I wanted to bring your attention to what you mentioned with the tax policy. Shouldn't we distinguish between the tax policy and social policy? Because we cannot pursue both objectives through tax policy. A tax policy's main objective is to collect the tax revenue. The government claims to help the poor through its tax policy. Is trying actually to resolve its responsibility of really trying to help the needy, because the tax policy should be used to collect money, which then we can look at the objectives of how to spend that money through social policy and different programs, and then be able to measure their effectiveness in how they are helping the needy. So I think that just distinguishing the tax policy to collect income and use the social policy to help the needy would bring more transparency and accountability to how the money is spent and how different social programs work.
I agree with that 100%. We present that argument in our book, Flat Tax. This is crucial because every time you change the tax code for the purpose of achieving some social goal, either to encourage some kind of economic activity or to discourage another kind of economic activity, you add additional distortions to the economy. And each distortion you add means a misallocation of capital investment, a misallocation of labor, less economic output, less efficiency, lower growth, and in fact, as you point out, less tax revenue for the government. Indeed, we should use the tax system to collect taxes. Then we should use the expenditure side of the budget to make decisions about how to spend that money for the various programs the government runs by way of defense to social expenditures. The reason the tax code is used to achieve social aims is because it's impossible for the ordinary voter, and even for many experts, to see what's in the tax code. The average tax bill is anywhere from 500 to 1,000 pages. And you don't need 500 to 1,000 pages to adjust the rate 1% or to index the personal allowance to inflation to keep it from being a higher tax. You just need 5 or 10 pages. But hidden in those hundreds of pages are all kinds of penalties and subsidies and other distortions. And this is why the tax code runs up to 90,000 pages of its regulations, laws, and enforcements, and no one really knows what's in it. There have been many experiments where people take the same income of a given household, go to 10 different tax preparation services, and get 10 different answers for the taxes owed. On the expenditure side, very often people don't want to discuss how they're spending money on various programs. They know certain kind of programs are not popular with the public. So taking those programs and putting them in the tax side of the budget in the form of a subsidy allows them to give money to those programs without ever voting for those programs. And the fewer votes members of Congress have to take on controversial issues, the easier it is for them to claim they're doing a good job. Your point is exactly correct. The sooner we get back to something like that, the better. Ronald Reagan was well on the way to achieving that goal at the federal level, and then Bush and Clinton, the first Bush, largely undid many of those benefits.
There's also an aspect of the flat tax that we can argue static versus dynamic approach, where in a highly progressive tax system, we're looking at redistribution of the current income, while in the flat tax concept, we are looking at a dynamic approach. By reducing the taxes, bringing the low flat rate, we are going to create new jobs, higher economic growth, which will allow us to collect more tax revenue in the future, and we are going to be all better off. So instead of redistributing, we are growing and having more tax revenue. Why is this argument not being taken?
The evidence among economic analyses of the flat tax, and in particular the flat tax I wrote with Robert Hall, which provides a very strong investment incentive, thus taking the tax base and having it be consumption by excluding investment. We analyzed and read all of the serious academic economic literature which used various statistical techniques and models, and every single one of those studies said that a low flat rate will grow the economy faster than the current progressive, complicated, full of loopholes tax system. We don't know how much. Some people say just a little, some say quite a bit. But we all know it will improve the performance of the economy. For some reason, the politicians have stipulated that organizations like the Congressional Budget Office are not really allowed to use dynamic scoring. That means that if we were to move the tax code from the current system with 5 rates to one low flat rate, they're not allowed to say that economic growth could be 0.5 percentage point higher, which would mean more output and more revenue every year. There's been attempts by some Republicans to change this, but they have been very unsuccessful. I think one reason probably is because members of the Democratic Party and the intellectual left, if they agreed to the proposition that a low flat rate would cause the economy to do better, raise more revenue, and in fact make it easier to help the poor, it would be very hard for them to continue to defend their ideological support in favor of steeply progressive tax.
We have empirical evidence from the countries that have implemented the flat tax that they increase their rates of growth.